Hey everybody, what's going on? And welcome back to another exciting masterclass. Today I have with us Ari Page. Ari, how you doing today, man?
I'm doing awesome. Thanks for having me, Nick.
Yeah, no, thank you so much for being here, dude. This is really exciting. You actually were on my group coaching, and that was a hit. I'm actually still getting calls today about you being on the group coaching. So I think a couple people told me they were signing up. So I'm really excited to deep dive this with you, and we can really get this out into more people's hands. I actually signed up with you myself for this strategy. And today, what we're going to be talking about is utilizing business credit cards in real estate, whether it's buying properties or funding our businesses, or however we can do it to fund our personal goals in real estate, or our business goals actually in real estate, and using those business lines of credit. And you are the master at this. So give everyone a little bit of insight. Who is Ari Page? And how did we get here? You own a company called Fund and Grow. What's your story arc that got you into the world of 0% interest credit cards?
Wow. So I actually come from a blue collar background. So if I go back to RE childhood, I grew up in a community that was very similar to an Amish community. And so I had a very, very unique childhood where in the community you learned about the power of the group and working together, which has served me so well in being the CEO of Fund and Grow. But then after leaving the community, I was working in the shipyards. So I worked in the shipyards building Navy ships for quite some time. And that was a lot of fun. I got to be honest, like getting a stack of blueprints and being told to go and modify things on the ships and working with a team of people, cutting and welding and doing all of that. That was a lot of fun, but backbreaking, very difficult. You're breathing in welding smoke. It's not the most glamorous long term thing to do. And so while I was working in the shipyard, a friend of mine, his name was Dave Candle, he ran a mortgage company. He kept on emailing me and calling me. We didn't really use text too much back then. Our phones
So
weren't
long
even didn't
ago.
even have text.
Yeah, yeah, yeah.
And but he was asking me, he's like, Ari, can you help me out? Because I was always very much a computer nerd. He's like, Ari, can you help me with converting these phone calls to a audio format that I can put on my website so people can hear the testimonials? Pretty simple to do. So I was helping him with that. And then one day he's like, Ari, you know what? You should come and work at my mortgage company. And I was like, Dave, I don't know anything about that. I grew up in an Amish like community. You know what I mean? Like what is this? I'm lucky to be working in the shipyard. He's
Yeah.
like, Ari, trust me, you are smarter than all the other guys that work here, as well as all of my clients. So I'm pretty sure you'd be able to do this. So I started working with him, and we started funding clients and doing commercial mortgages. And so I onboarded with him right in the 2006, 2007 timeframe, which was right before the big market crash
Yeah, yeah,
of
yeah.
2008.
Yeah.
And so the mortgage lenders, especially commercial, were feeling it before the crash, before everyone was seeing it in the newspapers and on TV. The mortgage lenders were approving for lower loan to value amounts. So it was dropping from 80% to 70% to 60%. People were having to come up with more down payment money. And so my mentor showed us how we can use business credit cards for these commercial mortgages for these business clients to be able to make up that stopgap money, that down payment money. So we were getting clients 200, 300, 400,000 in business credit cards. And at the time, it was even easier to get access to the money because they allowed you to do balance transfers directly into your bank account. Today, that's called a cash advance, and we don't recommend it. But back then, it was a lot easier. In today's world, we'll get more into it, but there's wonderful third party services that you can use to directly fund an escrow account off a credit card. So we were using the business credit cards to come up with that 20, 30% down that the client needed. And after funding a bunch of mortgages and doing it that way, we realized that the real gold that we had here was these business credit cards and accessing 200, 300. Clients were getting up to $500,000 in business credit cards that could be used for anything that their business needs. It could be used for down payment, earnest money, rehabs, could be used for marketing, advertising, buying leads. There was just any conceivable business use it could be used for. And so we created a program based off of getting clients business credit cards, and that's kind of how Fund and Grow was initially launched. So that's how I got into doing this. Since then, my mentor has passed away, actually many years ago, and so I had already bought the company from him. He wasn't really one for running a business credit card company. He was more of a mortgage guy, work at home kind of guy. And today we have a whole team of around 50 people in the Fund and Grow building down here in the Tampa Bay area. So it's a lot more of a corporate like environment. So that's kind of the journey of young Ari to CEO Ari.
That's awesome. And I really like that. It's very similar to my story, right? It's we grew up, I was my first cold caller. I wasn't trying to create a lead generation business, but I got really good at it and saw that it would solve a greater need. And then went into it. And I feel like your story is you're like, oh, well, I'm organically helping people get $300,000 in lines of credit, not realizing that that itself is a beautiful business, right? And it's like, you're like, wait a second. Why are we even funding $1 million deals if when I can get people hundreds of thousands of dollars, what can we then do with that can change our lives? So I kind of like your story arc, right? Where first we were trying to give them huge loans and these were just down payments. Now we're realizing that these credit cards, these business credit cards actually can fund the whole purchase. They don't just have to be down payments on larger loans. They can be whole payments on smaller properties, which is what's perfect for my clients when it comes to houses or land or anything that they might be doing to fuel their needs, whether it's software services or leads, kind of like you're
Yeah.
mentioning, which
And it
really
was
is really cool.
and it was really powerful because the qualifications for commercial mortgages are very stringent. So we were able to fund 80% more people, more businesses that wouldn't have qualified for a commercial mortgage, but they do qualify for the business credit cards. And like you just mentioned, it's so versatile. You can use them for anything. We have clients buying houses with them. We have clients purchasing leads with them. It really doesn't matter what your business wants to do with the funding. They can use it for whatever.
And there's even a kicker. It's not just business credit cards. You actually also specialize in 0% interest, which is actually our favorite kind, right? But so this isn't, so when we're hearing business credit cards, it's not like we're probably thinking 19 to 24% just in the back of our heads because what we think, but your program specializes in getting that money at 0% interest. Is that correct?
That's right.
Yeah.
Yeah. So there's an introductory period of 0% that can extend up to as long as 24 months at 0%. And on average, many of them are in between 9 to 18 months. And think about it. Think of what you can do if you have 0% for 18 months. A lot of clients are using the money for down payments. They're purchasing properties. They're rehabbing the properties. They rent out the properties. Then at that point, now the property's stabilized. Now you can get a DSCR loan. You can get a mortgage for it. Then you get your long-term funding for it. And you're back to having access to your 0% capital again for another project.
So it's almost like this is a strategy that can almost replace a hard money lender, right? If you is kind of like what I'm hearing, right? So it's like, well, we're used to paying 10% and losing all that. We can kind of funnel that back into our control. We don't have to get draws. We don't have to do all the stuff we've been dealing with on a hard money lender. So it seems like this is even one good strategy for that. Well, tell me, I know your message. Tell me, what are some of the benefits of using a credit card in today's market?
So not only can it replace a hard money lender, you can become a hard money lender. We have countless clients that are using it to lend out because with the arbitrage on 0% and with a contract at like 10 months, 12 months, and they have 18 months at 0% or 24 months at 0%, we have countless clients using it for that. And then your question, what all are people using business credit cards for?
Yeah, that's right.
Okay. So yeah, they're using it for purchasing real estate. We have clients that in the right geographic footprint within the country, they're actually just outright buying properties. When you have 300,000 of this, you could just buy a house with it, or you could use it for down payments, for earnest money. You could use it for rehabbing. We have clients that are doing all types of things from fix and flips to wholesale. And I'm also an investor. And so I'm using it for rehabbing properties. I've used it for down payments on commercial properties. I own a bunch of commercial buildings. Just recently, I rehabbed two residential buildings here in my area that I've owned, and now they're both rented out. Now, I'm going to use these cards, even if I have the money in my bank account to spend. Why not run it through the card so that I can get all the benefits of the card? I get asset protection through the card. I get cash back. Some of these cards pay up to 5% cash back. Imagine reducing the cost of your project by 5%.
Yeah, that's a lot, especially when dealing with hundreds of thousands of dollars, right? I mean, that is a lot. I mean, that's $5,000 on every 100,000. I know that's simple math for everybody, but man, that adds it up. So $200,000 property, you just added 10K to your bottom line with that offer. That's awesome. Well, yeah, okay. So you're saying I love the asset protection, the cash back. Are there any other benefits of using a credit card in today's market over your personal cash?
Yeah. So we have clients all the time that are working in markets where they haven't vetted the contractors yet. They might be branching out to a new area. They might be operating in a state next to theirs because their state has banned, certain practices, and they are working with contractors that they haven't vetted. So, what a lot of people don't equate together is that when you put a purchase on a business credit card, that purchase is now asset protected. So, if I'm putting a new roof on a flip, and that roof costs me $20,000, and then the roofing company doesn't finish the job for whatever reason. Let's say it gets red tagged and they're not moving forward very quickly. They're not trying to get it finished. They blame it on you a lot of the time. Or let's just say that they run off rogue and they don't finish the job. Well, instead of having to argue with them, go to small claims court, go back and forth, and because let's say if you paid them out of your bank account, if you paid them with check, if you paid them with wire, you're never getting that money back. I mean, you can sue them. That's going to be a long, arduous process. But if you put that on your business credit card, all you have to do is submit what's called a chargeback. So you call the number on the back of the credit card, you tell the bank what's going on, and they just reverse that transaction. Many business owners know what a chargeback is, and it basically allows you to reverse the transaction. Now, it doesn't mean you get to keep the money. What it does mean is that the bank now is going to hold that contractor accountable. If they want that transaction to go through, then they have to finish the job. If they don't finish the job, then you do keep the money. And so using a credit card as a form of asset protection is something that it's like a light bulb goes off in our clients' heads. They've never heard of that before. They're like, wait, I was in a situation exactly like that.
Yeah.
And for me personally, it's happened multiple times where
You have no power. If you wired it, they know they had you wire it for a reason. They know wires aren't reversible, right?
exactly. Yeah.
And it's almost, I'm going to oversimplify here. That's my skill set, but it's almost like you're getting a mediator who's then almost putting that money in escrow and saying, hey, it's not yours anymore either, buddy. Okay. And I need receipts proving that this is done. And if I don't get those receipts, then my client is getting these funds returned back to him. Is that interpreted properly?
That's exactly right. The way I say is the bank becomes your enforcer.
There's no better enforcer than the one controlling the money.
Exactly.
Yeah. Yeah, I love that. And I'll tell you, people get to work. I think we've all been there. And this is why even like with contractors, especially, we recommend draws, right? Or, hey, I'm going to pay you. I pay my contractors a quarter at a time, and it keeps everybody honest, right? And this is another way of keeping them honest, right? Would be another way to look at that. That's really cool. Before we move on to the next question, is there any other benefits or protections that we get in place? Cashback is a huge one. I'm a cashback monster. I'm like I have all my cards labeled. whether I should use them at the grocery store or the gas station or what I should use them for because they all offer the cashback benefit. So that's big. The mediation slash asset protection, that's big. Any other big glaring benefits outside of keeping your liquidity in your bank account?
Yeah, and I want to touch back on the cash back because that is just huge. Every month I'm getting, with the amount of money that we're spending at Fund and Grow, I'm getting thousands of dollars back. I'm getting airline points and rewards. So that's something that just can't be understated. If you want to fly anywhere for free, then use the cash, use the cards. You can run things through the cards that your business would have been paying out of pocket. And then that way it's just a steady flow of not only cash back, but also airline miles and points. And so that's definitely huge. But other benefits are, think about separating your personal from your business. So many people are using business credit cards, or I'm sorry, using personal credit cards. They're using personal loans for their business, which maxes out their credit. When your personal credit is maxed out, it pulls your scores really, really low. When you're using a business credit card, your scores stay nice and high. You're separated, your scores stay high. You're able to refi at any time. And so it's important. Like the commercial buildings that I purchased were only possible because I had used business credit cards to first create a Dun and Bradstreet profile and a Paydex score. I then had exposures on Experian business, on Equifax business. I wouldn't have had that rock solid business profile had I not been using the business credit cards. Now that I have that, now I can go to the bank, easily get commercial mortgages, easily get other types of commercial loans, whether it be buying a fleet of vehicles with my completely in my business name without having to sign for it personally, completely non-recourse. All of that is possible because I first started by using business credit cards. So that so that's just a huge benefit that a lot of people don't realize because they've never decommingled. As a business owner, they're using their personal for everything. And so they don't realize how easy it is to get approved for business credit cards. And because sometimes people have little statistics, they have little ratios that are wrong on their credit report. They have their cards are separated. In other words, they might have 3 or 4 cards from one bank, like from Chase. What we do is we show them how they can merge those cards together, how they can update the ratios on their report, how they can get it to report properly. Kind of like what we talked about in the Masterclass when I went over a credit report. There's just so many things. The Fund and Grow Bible of the do's and the don'ts is huge, of all the different things. Even the simple utilization of utilizing a business credit card, how you utilize it depends on how much funding you're going to get on your next round of funding. The next round of funding is when we do the credit stacking process for you. So in the first round, we're going to get you 5 or 6 cards that could total, 50,000, 100,000 for a client with good credit. The credit does not report to their personal credit. We then show them how to use the business credit card like a line of credit. That's the most important thing. How can I use it to fund an escrow account? How can I use it to purchase things with a vendor that does not accept credit cards? We take a credit card and turn it into a line of credit that can be used to purchase anything. And so when you have easy access to these types of accounts, as opposed to a lot of the other type of funding out there, where they're asking for thousands, not thousands, but lots and lots of documents, as it takes a long time. You have to guarantee your firstborn to them. And then it's just very difficult to get approved. With business credit cards, that's not the case. Now, some people, when they go and they apply, they have a hard time getting them. They get very low limits because they haven't positioned themselves properly first. That's what Fund and Grow is expert at doing. That's what we've been doing for the last 19 years. We've done it for 35,000 clients. We've built over $2 billion, billion with a B, of credit cards, of business credit cards. That is a lot of credit cards over the years. And before that, we did hundreds of millions in commercial mortgages. And so we have a lot of expertise surrounding reading the credit report, working on the report to make it more lendable, then taking the client and getting them the maximum amount of funding possible, getting them the high limit cards, the cards with huge limits that make it worth it. Because if you get access to 200, 300,000, that's a lot more funding. That's a lot more usable funding than if you get access to just a little bit. Sometimes people on their own, they're getting 2,000, 3,000, and it's like, well, how's that really going to help me? It's not going to help you. So translating that into the large limits, as well as being able to use it like a line of credit, understanding the asset protection aspects of it, then being able to build your corporate credit profile so that you can get future access to other more lucrative loans. There's so many benefits to it. I could go on and on.
Yeah. And I think that's important to also for all of us to understand that. You mentioned once you get established, and I know the score numbers work differently, but so I'm going to speak in layman's terms for everybody watching. And you're like, well, I'm so established now, I can just walk in and get approved for commercial loans and get approved for this. And I think the other benefit that you did touch on, but it's a little bit more hidden, is that you're establishing a whole new line of credit in a whole new industry, right? A business line of credit where they're expecting purchases to be bigger. I got a call the other day. I guess it's good. I don't know, but it was like, you have a Dun & Bradstreet score of 76. They're like, you could utilize this. To me, that sounds low because I'm used to 800 credit scores, right? But the call was like, you need to utilize this awesome credit rating that you have. And that was something I didn't even know. I built that up by accident doing something else 5 years ago, and I haven't even touched it since. So even that being around. So I think there are two perks that you're saying. One is getting established and getting established sooner in this world of business credit, because it's a totally different grading system. Dun & Bradstreet, I think, rule that world, right? And there's a couple other creditors too. But another thing that you touch on, which you skimmed over a little bit, but you guys, or maybe we haven't gotten there yet, but you guys, like I signed up. Right. And right after I signed up, I did the pre-qualification form, and you guys immediately sent me a breakdown of a report. And this report tells me what gets me in line for high limits and what gets me in line for low limits, right? And you mentioned this earlier. You're going to tell us what to pay down, how to fix those ratios, how to fix those numbers. So when the next credit company looks at me, they go, hey, we can give this guy $400,000 because look at how his account's set up. As it stands, a lot of us just might be at the administrative woes of these companies, right? Even my report right now, I signed up with you. I have a charge on there that says I owe them money, and I've never owed them money. So your services go above and beyond, because not only do you help us identify things that were holding us back in our everyday life, okay? Like I go pay for a card, this thing I didn't know I'd never bought is showing up and hurting that, right, as well. You guys help us remove those negative marks and then improve our rating overall. So I think I really like the hand holding that you guys have done with my account. I put my project manager on it, and that's who your team's mainly dealing with because I'm super lazy. But it's been awesome. She's like, Nick, we got to pay $1,000 on this card and $500 on this card, and then we hold, and then we're good until we get approved. And it's cool the way you guys take something, because when you don't know it, it is technical, right? But you guys almost show up like a coaching company, and you're coaching and consulting us through that entire process. Do you want to speak on that a little bit and on how the hand holding and the stewardship that you guys give your clients?
Yes. So we are a funding company, but also a coaching company. And when people come for funding, they don't necessarily want to hear that they need coaching. But just like you said, without getting these ratios in place first, without understanding it, like for example, one that's very common is that people are using their personal credit cards for everyday normal things, and then their cards end up being above the 35% ratio. So just to highlight one little issue out of 1,000, the 35% ratio is when a personal credit card, and I know you know this, Nick, but for everyone, the 35% ratio is when you have like a $10,000 card, and then I put more than 3,500 on a personal card that has a $10,000 limit. Now I'm over the 35% ratio. And when that happens, my personal scores start going down. My ability to get approved at other lenders goes straight down. Then when we apply, we get very tiny limits if we get approved at all. And so you have people that have great credit that they get denied. And they're like, why am I denied? I got good credit. Well, it's like, believe it or not, the ratios, the stats, they make a huge difference. There is a huge list of different things that we're going to go over. It's common for people to have closed accounts that have balances on them, or for them to have things showing up on their credit report that, like, you weren't even aware of. It's like, where is this? I didn't even authorize this. And so when that happens, that becomes a detractor that ends up getting them declined. And how often do people get declined from something? They don't know how to follow up. They don't know how the process works. They don't know what to
Feels
do.
final, right? Yeah, you're like,
Yeah.
well, I'm declined. I'll just walk away now, right?
Yeah. So when we apply, only 1/4 or less of the applications initially in the very beginning get approved, even though 87% of all applications we submit are approved. In the beginning, less than 1/4 of them are approved until we walk the client through the verification process. Once they're verified with the bank, suddenly, boom, 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 all the declines overturn into large limit approvals. And the client's like, this is insane. How is this even possible? And it's like, this is just the process of business credit cards. And so often people apply for things, and then whatever decision they get, if they're only approved for 5,000, they just take it. If they're declined, they just walk away with their head hanging down. They don't realize there's a whole negotiation process that you can go through.
Behind the scenes.
Yeah. So we are a funding company, but we're also a coaching company. It's just that people don't, when they go for funding, they don't want to hear coaching. They want to just hear funding, but there's a right way of doing it and a wrong way of doing it. And so what we do is we walk the client through the right way of doing it so that we can walk away together with a win-win, and they're walking away with hundreds of thousands of dollars of funding that they can use like a line of credit. And I just want to clarify that just because, guys, we're talking about personal credit, none of these business credit cards appear on your personal credit report. They all report to your EIN number, which is the tax ID number of your business. And the tax ID, the EIN, guys, that's kind of like it's kind of like your social security number for your business. But what it does is it keeps the credit cards off of your personal credit report. That's where it will report to the business credit profile instead. And then you end up building your business credit profile as well as another separate one called your corporate credit profile.
Just so you know, I actually enjoyed if it wasn't for the coaching, I wouldn't have signed up, because if I just have to, I've learned this the hard way about myself, and there's a lot of probably people like me out there. If I've just signed up for something and I get a laundry to-do list, I'm not going to do it. And then it's just not going to get done. So I viewed your coaching as more of accountability than coaching, because I'm like, just tell me whatever the hell I need to do and I'll do it. And that's how I've utilized it. So that was a huge plus for me. I could see people showing up and saying, I just want to, am I approved or not? But with me, I respect that credit is its whole own underworld, right? Like think Lord of the Rings. We got Gollum, we got Mordor, we got Frodo. You know, you guys are Frodo. You know, you guys are helping us navigate the underworld, and it's not easy. You know, I honestly don't know anything about it, and that's why I like having relationships with people like yourself. I like and I want to learn this for myself. I don't just want to say, hey, Ari got me these cards. How? I don't know, dude. I'd rather be like, well, I had to pay on all these credit cards and I had to fix all these ratios. And then he told me all this stuff to do. I mean, we're more in it to win it whenever we get the education. I'm sure there's a fable out there about you're making us earn it, right? In a sense, too. We're earning the knowledge and we're earning the credit score, because we're going to probably need that if we want to keep these credit cards, right? We're going to want to keep this knowledge and keep everything in good standings if we want to keep that up. So I personally love the hand holding, love the coaching aspect, and thank you to your team. Your team's all over it. And then even when we're lost in the sauce, I tell my project manager, hey, reach out to them, ask them where we are. You know, because I'm so disorganized in my personal life, and your team's has been awesome since. So huge.
And so also I want to throw in there that there's some, I know a lot of people, they're scrolling through Instagram and they see all these ads for funding, and there's a lot of funding companies out there that people have heard of, but there are some that are better than others, just to say it simply. And there are companies out there that will tell you things like, let me show you how to liquidate your credit card. And what they're saying is, let me show you how to charge your own credit card to get the cash off. Now, Fund and Crow's been in the business for about 20 years, over 19 years doing this. And through our extensive experience, we've seen other companies that have done this. We've even tried to work with companies that do that in the past. But this liquidating credit cards, which means pulling the cash off the card, is expressly forbidden by all of the card issuers. You're essentially breaking the law. And yet, there's companies out there suggesting that you do this. And you know what will happen when you do it? 9 times out of 10, it'll result in the credit card being shut down or the limit being reduced down to a very low limit. And the main selling point for these businesses, well, they're just trying to help you get the cash off the card. Well, that's completely against the card issuer regulations, their rules.
Yeah.
And so there's a right way of doing these things. There's a wrong way. We've heard of those other companies like Dean Graziosi's company, like the Seek Capital. These companies have been shut down by the FTC. Now, those companies were a lot younger than Fund and Grow. We've been around a lot longer than them. We're the oldest business in this space doing this. And what we've done is we have a huge focus on FTC compliance. And so one of those things is not trying to pull cash off cards. That's something that you're going to create a major issue, not only for the funding company, but as well as for the client. And there's a whole variety of other types of regulations and compliance surrounding this that has gotten those companies shut down. And some of them were doing some pretty decent revenues. You would call them a pretty big company, and they got shut down. Fund and Grow has been in this space for a very long time. Compliance has been at the top of our radar. And because of that, we've stayed ahead of all of the different regulations. We've actually started our own credit stacking board. So very soon, this board is going to be made public. My compliance attorney sits on it. I sit on it. And we are certifying credit stacking companies that are following the regulations so that people can know that they are working with a safe company, a company that is not going to result in their cards being shut down, result in compliance issues for themselves. And this has happened. It's happened for a lot of folks, and we don't want to happen to any of the viewers that are watching this, because there's just so many of these companies out there in this space. When I first started doing this 19 years ago, we were the only company doing it. And now there is tons and tons of copycat companies. I literally see ads on Instagram of people using screenshots from our website, from Fund and Grow's website, saying, we will beat the price of the best credit stackers out there. And then they have a picture of our sales page. And it's like, okay, I know what you're implying. Yeah. And then when you look at their practices, it's like, wow, this is a little bit sketchy. It's a little bit sketchy. So it's not always easy to do it the right way. It's not as easy when it comes to making the sale, to going through all the compliance and the regulation, but it is the right thing to do. It's the right thing to do for the client. It's the right thing to do for all the businesses that we work with. And it's the right thing to do for ourselves as individuals and people that work within funding.
Yeah. And I think, I'll relate that to everyday problems we see as investors, doing it right versus just doing it, whether it's all related to cold calling and text messaging. Yeah, I could hire a VA and stick him on a dialer and give him 100,000 records with phone numbers, right? But is he doing it right? Is he giving my company a good reputation or a bad reputation? Is he saying the right things? Are we buying enough phone numbers? What's our contact rate like? So, really a way to look at this is comparing it to everything in life, and that's like, you really get what you pay for, and we have to be careful. Sometimes we've all been there. Sometimes going the easy route costs us more. I got a really little short story about that. My garage door stopped working the other day, or my drain pan under my AC unit stopped working the other day. And I got a really lazy tech. Okay. And he goes, hey man, I can clean this out for you, but I'll have to charge you $200. If you want, I can tell you how I would clean it and you can just clean it yourself and I won't charge you at all. And I was like, dude, that's awesome. That's great. Thank you, bro. Like, I think he's doing me a favor. Okay. Let me tell you what ended up happening. He's like, oh, I just grab hot water and pour it down this pipe. I spent the next 5 hours pouring hot water down that pipe and it did not fix my clog. Then the hot water I was pouring dripped onto my garage door opener and it shorted out my garage door opener. So while I tried to save $200 doing it myself, it cost me 5 hours and $1,000 garage door replacement. And that's just a very simple story about, just am I going to get it done? Or am I going to get it done right? My rule after that day was next time a guy says he'll teach me, the answer is no. This is your job. Okay.
Yes.
I can't hold myself accountable. If he messed it up and he broke my garage door opener, I could at least make a call, right, to his company. But I was solely liable for everything and a part of me. And that just reminded me of what you were saying is if we go the chintzy way out, right, there's going to be other consequences that we don't need to deal with. And I think protection, that's what we provide at Lead Mining, a lot of protection from the DNC, from litigators, from having to do it yourself and figure it out. When you hire us, we're both the same thing. We're both that done for you, done with you vibe, right? And use our experience to level up without the pain.
Yes.
It's our job. It's customer service for companies like ours, for our clients to have little to no pain, right? So definitely utilize Ari, exactly for that. I think that's cool. Tell me, how is it possible that these banks are able to do 0% interest on these sums?
Oh, you've hit on the best question ever here. So we get that question a lot. Like, well, these are 0% cards. How can a bank offer a 0% card? Well, first off, the banks, when they're offering 0% cards, they're not offering it to subprime borrowers. They're offering this to 700 plus credit scores. So if you have a good credit score, they're going to offer it to you. Then it doesn't even report to your credit. So you have to be a prime borrower, number one. And those prime borrowers are the perfect people for them to target with insurance and banking products and the wiring products and all these different other ancillary services that the banks are going to make a huge amount of money on. So that's number one. They want to target you. They want to target this specific business class of people with those products. But the second and larger thing is banks aren't making all of their money on a credit card holder off of the interest rate. Now, that's a shocker. But every time that you use a credit card, let's say you use a credit card, you go to Home Depot and you swipe it. Home Depot is paying an interchange fee. They're paying for the use through their merchant account to be able to charge your card. It could be 1%, 2%, 3%. It could be more than that. Small businesses sometimes are paying 5% for the use of a credit card. And so every time this credit card is swiped, they're making more money. Are they making it just once? No. Just twice? No. They're making it every single time the card is being swiped. So, yes. So just by the virtue of you having a business credit card and by using it to purchase things, you are paying the bank. And when you add up all these millions of transactions that happen across the country every single day, across the world, you add them all up, you are talking billions and billions of dollars. And so it's not just the interest rate that the banks are making money off. Now, do the banks eventually want you to put money on the card and then they charge you an interest rate? Yeah. That's icing on the cake.
Win. Yeah. Right.
Yeah. They don't realize you're working together with a credit stacking company that's going to extend out the 0% for long periods of time so that you can keep flipping and doing your real estate and your wholesale and everything else that you're doing. They don't realize that. But either way, they still are making money every time you swipe that card, even if it's still at that 0%. So the interchange fees are literally capitalizing the banks with millions, hundreds of millions, billions, over long periods of time of dollars. And so it's not just about that interest rate. That's how they can offer it at 0%.
The entrepreneur knows that, right? Because we pay merchant fees as well. I think I pay 3.5%. We did over $1 million last year. That's $35,000.
Exactly.
In sales that I paid as a tax, right? And that's kind of one way to look at it. My tax bill is not much higher than that because I have really good strategies. But yeah, I think that's really, and that's important to know. So it's not really 0%, right? But those costs are being forwarded on to
Merchant.
the merchant. That's correct. To where you're swiping the card at. So they're still getting theirs. And if you're a power user, they're making that money regardless, right? As well.
In fact, the banks are making so much money on it, they'll split it with you. They'll give you 2%, 3%, up to 5% cash back,
Right.
depending on the card. Most of the cards are in between 2 to 3% cash back, but they're basically taking that interchange fee, they're splitting it with you, they're incentivizing you to continue using the card. They want people to use these cards.
Yeah, they want that habit. And just the same one I have. I don't even own a debit card because my debit cards aren't cash back. So I purposely have only cash back credit cards in my wallet. And like once that habit is set, and it's great, like I said, I do travel for free now, or maybe it's the cost of my business expenses, right? But it's not coming out of my liquid bank account anymore like it was in the past. It's now coming off of all the points that I've accrued, which is also and the points thing is also kind of fun. Like
Yeah.
I'm not gonna lie, like if it's a restaurant, I use my gold card. If it's a grocery, I use my city card. And it's just kind of fun to play that game. It's like, what am I pairing this up with today so I could get maximum cash
Yeah.
back? I've
Yeah,
honestly
I can't
really
wait to
enjoyed it.
travel. I have over 1 million points or a million airline miles on my what is it, the American Airlines card.
Yeah.
And
Yep.
so I'm just itching. I'm like, where am I going next?
Yeah.
Let's go on vacation, babe. It's
You're gonna
just
like
so much
retire.
fun.
You're gonna retire with points on that card. Yeah, I love that. I love that. Well, cool. And let's also talk about, so how can we get rubber to meet the road? So how would this pair well with lead mining? So a couple of things that I'm picking up on right off of the bat. One is you can cover some of your lead generation costs. Okay, that's low hanging fruit. But a more hidden subtext is, let's think about the confidence you're going to have talking to sellers, knowing that you actually are the buyer now. The biggest issue I hear sometimes, well, Nick, I'm not really buying the property myself, or, how do I navigate that language? Well, the cool thing is, by having these credit cards at your disposal, we are also shifting the power dynamic. You are, or can be if you want to, you can be that buyer of that property. Now, is it going to be the best thing for you to buy it? That's up to your wholesale deal and your other buyers, right? But when I think about this tool, I think of confidence, right? What does confidence look like? We no longer are going to buy it. Well, let me check my bank account. Oh, well, there's not enough in there. Oh, well, let me check my credit card limit. Oh, there is enough in there. And so we're not even touching our personal principal in our lives, our personal liquidity. We're not touching that. That's great. And we're able to move with confidence, I think, whenever navigating with the seller. It's not always, well, I got to talk to my wife about the budget. No, we've got this money. Another way to look at it, and I think you brought this up earlier, is you're now separating personal from business. And you can actually say, these are my business expenses that I can tolerate over here. We do have enough to buy a $150,000 property and rehab it. That is what we're looking for. You can reverse construct the numbers rather than saying, where am I going to get the money from? Now our new question is, where is this money going to go now that I've got it? So I really see using it, whether it's with lead mining or to serve you in your real estate business. The big phrase that's coming up in me is peace of mind. Okay. We're not messing with our nest egg. We're not messing with our 401k. I hear that a lot with my clients. The 401k, all this allows us to not have to mess with our future liquidity. Okay.
Yes.
And I think that's also very important. Do you have anything to add to that?
And adding on top of that, that this type of loan, if you will, is unsecured, meaning that it won't go against your car. It won't go against your house. It won't go against the flip that you're doing. It's not like a hard money loan or a mortgage loan or an auto loan where they're going to take away that asset. They're not going to take away your child. They're not going to take
There's
anything
nothing to
away.
repossess, right? There's
Exactly.
nothing.
It's unsecured. It's actually genuinely the safest form of funding to use. Now, Of course, by saying that, I'm not advocating that people don't pay it back. Our clients have good credit and they know how powerful that asset of good credit is. So they're not about to mess it up. But we're not, we're not psychics or whoever it is that reads the future. Not a psychic. What is that? A fortune teller. So we don't know what's going to happen in the future. We don't know if there's going to be a market crash. We don't know if the dollar is going to drop to zero, which it seems to be going down pretty fast right now. We don't know. And so it is safer to use unsecured funding where if the worst should happen, they're not taking away your home. You use your HELOC and then they could foreclose on your house. You use, a variety of other types of loans that are secured on assets. They're taking away your assets. Let's say you use this to buy a couple of vehicles for your business. Well, if the worst case happens and you can't make the payment, then at least you still have the vehicles. At least your business is still operating. At least you still have cash flow, even if you have a bad credit mark.
I really like that, and it also, what's coming up for me is, we've all seen the marketing about using other people's money and we can agree with it. And I think this is even better because we're not going to friends and family, right? We're going to a bank. They've got it. Sometimes we've all probably been there, whether we were 18 years old or 24 or 34, but you borrow money from a friend or you get someone to invest in you personally. There is, even if that is unsecure, there, you know what, that relationship secured that loan, right? That was your mom's or your brother's or your best friend. So one of the thing is, this is the best form of other people's money. Okay. And it's because it's not a relationship you have isn't on the line with this money. And I can tell you guys, it's always a bad idea to borrow money from friends and family. I don't even lend anybody money anymore. I think we've all
Yeah.
maybe been down that road.
Oh my goodness.
But when we're in a dire spot, that feels like the best option. So I just want to share, when you see the market, it's like, oh, other people's money, this is that. This is the best form of other people's money, and it's unsecure. Right. And now credit, we all at any point can decide to trash our credit. Highly unrecommended. And the beauty of credit too is, even if you're ever even in a pinch, I think one of my favorite things, and this wasn't planned, but there's also hardship programs and there's other opportunities. Keeping your credit and as high standings as possible is the best thing ever. Even if you run out, like a house, for an example, like, hey, if I've got this house, if I destroy my credit, I can only move one place, and that's an apartment. Okay. And so the
And
credit.
you have a big down payment that you're gonna need to put.
Yeah, right. And that's why, like, credit to me has become so important. When I was a kid, I destroyed it. I'm not gonna lie. I had a high credit
Same,
score.
same. I had to fix my credit. So that's why we now also have the expertise in another company that I own to help fix business owners' credit. I got so much experience expunging all of these different negative items off my report. I built a whole company on that as well.
Yeah, I love it. And so now, do you guys include, how does that pair with this? So if someone goes to pre-qualify
Hmm.
and they don't, I know you have two links, I believe, a pre-qualify and a sign up. So someone goes to pre-qualify and it's below, does credit repair kick in, or
Yep.
what happens there
So if someone goes and uses the link that you're mentioning, which I believe is going to be below
in the
here,
video?
then they will immediately either see the amount of funding that they're going to get, or they're going to be directed to our credit repair company. And in that case, that's the only thing that we can do to help you to fix that asset of your credit so that you do eventually, one day, hopefully soon, qualify for funding. And there's been so many credit repair companies over the years that Fund and Grow has referred clients to. And the reason why I started my own credit repair company was because my own method was the only way that actually got all the items deleted. That was the only way I actually could get them removed. And it's the same type of thing. I was just on the phone the other day, or actually the Zoom nowadays. That's the new phone, with one of my old affiliates, and he was telling me about a credit repair company that he had been referring people to, that it's doing this credit sweep where they just say that everything's fraudulent and they sign a police report. And he's like, Ari, I don't want to do this anymore. I don't want to send another client over to this guy because I just know how dangerous that is. And it's just another one of those things. When these people have these outlandish claims that they're making, Sometimes it's not compliant. And when they inevitably get found out, every single client that went through that process is going to have every single item put right
We
back
had
onto
it.
their credit report.
That's intense. And yeah, I'll tell you the low integrity, like it works. And we've all been there too, right? I think much like the credit story, right? Even me in my life, I tried to do things the short way, up until my 20s. And then one day you're like, well, we're just going to have to do this the hard way, right? And I think
The
that,
right way.
there's always a way to get it done faster, but what is the long term, failure rate on that, right? It's not
Exactly.
just, we're not slapping a band-aid on. Like one of my rules in my business, whenever something breaks, I always say we need to solve for prosperity. And what I mean by that is let's not just slap a band-aid on it right now, but let's see what the actual problem is and solve it forever right now, rather than, creating other, that's kicking the can down the road, right? Oh, we'll see. Well, when this will be a problem later, I'll deal with it then. And your strategy stop it from ever becoming a problem,
Yeah.
which is
Yep.
which is super cool. All right, so two questions left. One is, tell me about, you have this awesome thing, your radical transparency promise. Tell me about that.
So, our radical transparency promise is about letting folks know up front every single cost that's going to be part of going through Fund and Grow. And so there's companies out there. This is the same compliance thing. One of the reasons why some of these other credit stackers were shut down, because they will have a upfront fee and then they'll charge you, after charging you $5,000 upfront, they then charge you 10 or 15% of the funding that they get you. And so, and it's not clear. Like the client's like, well, I already paid 5 grand. I didn't realize they were charging me on the back end. And so we don't do that at all. We have a membership where you can pay upfront. And by the way, guys, you'll get a $500 discount off of our membership. Our membership's $4,000. You'll get a $500 discount by going through Nick's link. So I'll bring it down to $3,500. And you will not be charged on the back end. We are not gonna charge you an application fee. The banks won't charge you an application fee. There's not going to be any annual fees on any credit cards. Our radical transparency promise is that you're not being nickeled and dimed to death. There's not going to be other fees. Now, if someone does not want to pay for the membership, and the membership, by the way, does 3 rounds of card stacking, can build up to $300,000 of funding. Now, if you want to just go through 1 round of funding and you don't want to pay a membership fee, then we will put you through the funding process first and then charge you. We call that our pay after funding membership. Now, the pay after funding membership, you don't pay anything up front except for a $50 application fee. So it's a very nominal $50 application fee for us to look at your credit report. Then, after that, we will charge you 8% of the funding that we get you, which has undercut all of the other companies out there that are doing anything similar to this. They're all charging 10%, 12%, 15%. We've seen some that are charging 20% of the funding they get you. They get you 100 grand, they're charging you
Grand.
$20,000. And I think that charging a client $8,000 on 100,000 is a lot. That's why we have this membership, which cuts that total fee down to 3,500, and you're getting 3 rounds of funding. You could easily get up to $300,000. So this is our radical transparency promise to all clients, to everyone, and this includes to myself. How would I feel about charging someone 15%, 20%? That is usurious. That is just not good karma at all.
Percent. And I love that you even have the option, right? And that's great. So hey, we can take the risk up front and we can pay less. If you use our link, which is huge, that's over 10%, in case anyone's kind of good at math there. I love that. And or you could say, hey, no upfront risk at all, and it's just an 8% commission. Right? It's like another way to look at it. And I think that that's pretty cool to have that. I'm a huge fan of options. Anyone who goes to our website, see I've got like every package in 4 different sizes, and I think it's important to return that power to the consumer, and I love that. I love that you do that. Well, very cool, man. So tell us, where do we go from here, Ari? I know I'm going to have some links in the chat. What exactly, if someone wants to work with you and they have these links, what exactly should they do and what's going to happen next?
Perfect. So if you already know that you have great credit, if your credit is more than a 700 and you know that you're good to go, you can just go to the sign up link and you can get started for one of the programs. And that's very easy to do. As soon as you get started, you're going to get access to our client portal. There's documents that you need to sign in the client portal. It's all done through e-signature. It's very easy to work with. We're not asking you to fax us anything. It's a very simple, straightforward process. And then we move you forward into funding. We help you get the funding. Once you've gotten access to the funding, then we're going to show you how you can use the funding to fund an escrow account, to use it like a line of credit, to use a credit card like a line of credit, to pay vendors that don't accept credit cards. Now, let's say that you don't know exactly where your credit stands. Then you're going to look at that other link that Nick has put down below. And that other link is to get you pre-qualified. That way, we're going to do a soft credit check. There's not going to be any cost to that soft credit check. It's free, no obligation. You just go ahead and pre-qualify yourself. And our business development team will follow up with you and give you a free business credit consultation to let you know where you stand. You'll also know if you have bad credit. If you have a credit issue and you have late payments or derogatories or bankruptcy or anything on your report, then you'll automatically be referred to the best credit repair company in the industry to start working on getting those items removed.
That's awesome. Yeah, I'm a huge fan of the hand holding. I think life is crazy, just as it is. I need so much accountability if I'm doing something new, and I love the way you guys have been working with me. I think we're maybe about 45, 50 days in, somewhere like that. We're about to start our first round. And, it's just been awesome. I've got 40 employees. I've got 4 cats. None of them are showing themselves.
Oh, I've been seeing one of them behind you.
Popping up.
It was a little distracting. I kept on watching him instead of you.
I thought I saw your eyes. I know, they're so cute. But yeah, it's like, I can't tell you guys what a pleasure it is to have a consultant that comes with that. Same way how I run lead mining. Right? I don't just send you a bunch of leads and say, good luck out there, kid. I send you a bunch of leads and I say, here's my cell phone number. By the way, here's a course you can watch if you need help converting them. And that's right. I'm trying to align myself with businesses that are a lot like mine, that white glove level of service, because that's what you're used to. If you're a client of mine, I want to make sure I'm sending you into a very similar scenario. Ari was actually talking to me about this to be an affiliate, and he closed me on the call. I was like, I'm ready. Can I sign up right now? And I signed up on the call with him just while he was telling me about it, because I'm excited about $200,000-$300,000 in funding, right? I mean, there's nothing better than having that confidence. And in whether that money gets used or doesn't used or whatever the hell happens to it, it is confidence. Right? It is, I've got a nest egg, I've got a worst case scenario, I've got a plan, and so it's like, that is so important for all of us, right? So even if we don't have some huge, I'm going to buy this property at this address with it, we don't have to have a plan yet, right? But just having it, I think is so cool. And I'm personally excited. And the other thing about credit, which you can speak to this before we get out of here, is once you start getting approved for bigger amounts, you keep getting approved for bigger amounts. The way, when this happened with
stacking.
Yeah, is that what it is? And, with me, I never got approved for anything big. And then I bought a Tesla for $65,000 a couple years ago. Okay. Then my next car was $120,000. Right. And it was like, no problem to give me that. But if I would have never gotten that Tesla, I would have never shown the credit companies that I'm able to handle a larger credit amount. So I think the other thing that happens is the momentum we gain when we start showing these companies that we can be trusted with all this money. And again, it's confidence, right? When a big purchase comes up or a 50 unit apartment building comes your way, it's no longer like, I don't even know if that's a thing. Now it's like, hey, that actually might be a thing. All right, let me call my guy. I might be, and I think that that's really cool. So I love. It's almost like community service what you're offering here. So
Yeah.
I think it's really cool, Ari.
So now a lot of people might be thinking, well, how long will it take once I get started for me to get my first round of funding? So if someone has great credit and there's nothing we can do to enhance their credit, which happens sometimes, then they could be looking at receiving their first round of funding in hand within 14 to 21 days. Now, if there's something that we need to do to their credit, like with yours, where there was some pay downs needed, there was some issues on the credit report, like that thing that showed up. And in that case, now everyone knows about that 30-day cycle with the credit bureaus. So in that case, it's going to add on extra time before the credit report reflects those updates. But once those updates are reflected, then we can move forward and start that application negotiation process. So a general rule of thumb is 14 to 21 days. And then if you need to add in one of the 30-day cycles, then of course it could take 45 to 50 days before you're getting to that, so that you can have that extra 30 days in there. But the great thing is, Nick, as you know, we have a 60-day money back guarantee. We're so confident we're going to get that money for you within the first couple months of working with us. We have a wonderful money back guarantee. Very few clients utilize it, but every once in a while, life, comes around and they need it. And that's why we want you to have that peace of mind.
I like how you guys thought of everything. That's why you really do remind me of me. At Lead Mining, we have all these fail safes, and customer service is the priority. And that's what I'm hearing from you. It's like, it's about serving the customer, right? And that's one of my tenets is the customer experience, that it's so great. So I love that about you guys. You've really taken this to the next level. It's not win or lose. There's support, there's guidance, there's help. And then there's great funding, at the end of it that we could then do with as we please. So really cool stuff. And guys, I'm going to make a link. So for the pre-qualify link, all right, you can go to leadminingpros.com/pre-qualify. And it's going to bring you right to Ari's link. Okay. Now, if you have great credit, go to leadminingpros.com/great credit and you can just sign up directly. Okay. But you can choose whichever one of those you want to start with. But that's what I recommend. And then Ari's team will be reaching out. Now, if they did the pre-qualify, I know you said your business development team will be reaching out. What kind of window would we expect after that pre-qual is submitted?
So if it's during the day, when, during business hours, then they're going to be reaching out pretty quickly. It's going to be probably within a couple minutes. But it's safe to say that even if it's on a weekend, within 24 to 48 hours, you're going to get a call. So you're going to get an email from us after you opt in. You're going to get a text message and be part of our AI texting system where you can start to answer questions. You could book a call with one of our business development managers. And then they will, if you don't do any of those things, then our people will be reaching out to you to go over your credit with you and to get you started. And we want to help you one way or the other. Even if we can't help you and you might need some credit repair first, we're still gonna advise that, so that way you can get that fixed and then you can get back into the funding circle and then you can move forward and actually get funded.
Customer left behind, right? Even if we
Yes.
can't get funding and we got to go down this in your world, it's not hit us up in 6 months. It's follow these steps. Let us know when you're done, and then we'll go back in there. I love that, Ari. Well, awesome, man. And guys, as a quick reminder, leadminingpros.com/pre-qualify or leadminingpros.com/great credit. Okay. And those will bring you right to the pages, right to the forums. And Ari, man, this has been such a pleasure. Any final words before we get out of here?
Well, I always think back to in history class when we learned about the great American frontier. So hundreds and hundreds of years ago, what we were told anyway, that so many people, so many Americans were self-determining at the time. And in today's world, everyone like works for someone, right? But back then, you had people that were farmers, they were hunters, they were traders, they were doing woodworking, and they would take these things directly to the market themselves. These guys were entrepreneurs, they were hustlers, they were business owners, and they worked for themselves. They set their own hours, they created their own destiny. That's what Fund and Grow, that's what we do for our clients. We want to put them in control of their own businesses. We don't want to Shark Tank them where they're having to give up 50% of their business for 50,000 in
Funding,
funding.
right?
That's crazy. That's crazy. We want to put people back in charge in their own lives so that they can build a thriving business, which makes a thriving family, which creates a powerful community, and it puts people back in charge. So that's what our goal is. That's what our dream and desire is.
That's that confidence I was speaking to earlier, right? And that's exactly what this does is it allows us to change the trajectory that we're on just through confidence. I think that's so cool. I love your mission statement. Very glad to be working with you in several ways in this relationship, and I'm a customer of yours too. So I'm super pumped, man. But thank you so much for being here today, and yeah, we'll be chatting soon. All right, thank you so much.
Yes, thank you. Thank you for having me on, Nick. I appreciate you.